And I want to first of all get a perspective. I'm sticking with our focus on consumer good companies today. Your thoughts on the rally we've seen in that segment? And we know, for instance, the food companies are up about 25%, pretty much in line with the NSC, but clearly there are some standout performers there like Nestle Nigeria.
Thank you, Wole, for having me. As you mentioned, the consumer goods, the fast-moving consumer goods sector has benefited from the recent rally we've seen on the floor of the exchange. And it's not far-fetched because, by nature, consumer goods are meant to be some sort of defensive stocks, and by implication, it means that they always ride out the economic cycle as it were. And if you look at these companies in particular, you see that a lot of stuff has been going on with them, particularly modernization of the plants, building capacity, providing their whole energy because of the lack of dependence on the power holding company of Nigeria, and the outlook for them just becomes more positive. And if you look at all this expansion and all this investment they've been making, it's actually really being reflected in their profitability and earnings, and that's the major reason why, because the market takes them seriously. They're anticipating a rise in demand, and they're expanding and they're investing in capacity expansion so that they can be able to take advantage of the current economic scenarios.
Right, let's look at the opportunities that they've offered though. Like I mentioned, Nestle is the standout performer. It has rallied significantly this year, but Cadbury is a stock that many people are pointing to as an opportunity if you want to be exposed to food companies in Nigeria.
Yes, Cadbury in particular. If you know Cadbury, for a while, because of the crisis they had in previous years, didn't pay dividend for a long time, and they were in the woods. But right. Since the new management that's coming, what Cadbury has been able to do is that the current management has been able to repair the books, repair the balance sheet, put the company on a profitable path. And by the end of 2011, the company's negative shareholders fund has turned positive. If you look at all the parameters, return on capital employed, return on equity is over 200%, coming from a low of 7% in previous years. So, with such results, with such a trail of performance, it's only expected that people should just angle in and take advantage of this current valuation, because the stocks definitely will do well to end the year, particularly in Cadbury. Cadbury, I forecast will pay dividend to end this year, and it's just rational that you key in now so that people can benefit from the prospect of good corporate action from them, and that's a major reason that is impacting on the performance of these two stocks, Nestle and Cadbury. Is a good outlook for them. They are giving investors returns in terms of capital appreciation, which we've seen, and of course corporate action in form of dividend, which will definitely come given this current earnings per share that these companies are carrying.
Let's shift focus a bit and move on to the brewery companies. Of course, the standouts there are Nigerian breweries, a subsidiary of Heineken, and of course we have Guinness, subsidiary of Diageo. But of course, the newcomer, and which has made a phenomenal performance this year, is up, I think, about 200% this year. That, of course, is International Breweries. Your thoughts on the opportunities that those companies provide? Of course, International Breweries is now a subsidiary of SAB Miller.
Yeah, my thoughts particularly will be based on Nigerian breweries and international breweries. I'll get to Guinness later on. Nigerian breweries, as you know, anticipated the current scenario in the brewery industry, because the company in the previous year announced to the market that there is an unmet demand for the brewery sector in terms of brewery products in Nigeria, and the company doesn't fold its hands at that. They actually went out through its parent company Heineken International to acquire breweries in Nigeria that had underutilized capacity, and you can see that the churning out. You can see that the output from that company has grown because to meet the demand, which is at that time the installed capacity of Nigerian breweries could not meet. So, given that fact, of unmet demand, huge demand out there for brewery products, international breweries is just benefiting from that perspective. But to a large extent, the brewing industry in Nigeria can be said to be segmented in terms of on regional basis, and international breweries definitely at the part of the country where it is at now is currently benefiting from the strong demand for brewery products. And Nigeria is considered one of the happiest people in the world. Nigeria is a sociable society, and this company is just continuing to do well. Concerning Guinness hasn't really seen much in the rally. The product launch of App Lime, didn't really succeed in the market, and right. The company's performance is not really moving much. But what I suspect is that because of the float of the company in the market is not that much, and because the price is just way out of the ordinary investor, that's just the reason why we're not seeing much rally in it.
Okay, let's move out of the consumer goods sector, because I really want to get your thoughts on the rally we've seen, and a sector that has not really benefited from that is the insurance space. Clearly, there's a lot of history to that, but your thoughts on the extent to which the insurance sector has lagged the market recently.
And the insurance sector is just a sector that has received investors' apathy, despite in the face of this rally that we've all been talking about. And a quick check just showed that only 3 companies, Mansard Insurance, Continental Re, and ICO, are the only companies that actually returned positive return that's from January till date.
Right.
And the sector is just suffering, from lack of capacity in terms of human capacity, in terms of generating products that are satisfactory to the investing public. And again, look at the business model of those insurance companies. Most of those insurance companies came as subsidiaries. The profitable ones came as subsidiaries of the banks. But the change in the business model for the banks, as suggested by the central bank, the rejection of the universal banking system to the old cost structure that the banks are supposed to support now, just threw the sector in the open. And we're still waiting for the sector to churn out, products. They let them convince the market that they actually know what they're doing. There's not much product out there. There's not much marketing drive out there. The insurance penetration in Nigeria is very low. So I think the market operators, the industry operators, the companies in that sector need to do more. They need to do some kind of house cleaning. They need to check themselves and see what's happening. They need to sensitize the public about more of the insurance. I know it's not the fault because the insurance laws are not well carried out. They're not well carried out by the enforcement agencies, and that explains the reason why we've not actually really seen much appreciation of the insurance business in Nigeria. So until we have a more enforcement of the insurance codes and laws by the regulatory authorities, and until we see the sector participants, giving us more convincing reason why we should believe in their business model, we'll just continue to see this lackluster performance from this sector.
Okay, now let's talk stock picks now. The market has rallied. We see it. I'm giving back some of those gains now. Profit taking happening. Your thoughts on a few stocks that I think could outperform the market in the fourth quarter? I want to start with Sterling Bank. Your thoughts on that counter in particular?
Yes, Sterling Bank. Sterling Bank for me, it's in the second tier banking arena. For the company, my opinion is that I'm not really excited about the stock. Given the fact that it's a low cap stock, fine. But given the opportunities in the market, given the size of its balance sheet, given its competitive edge and competitive advantage in the market compared with its peers, I'm not seeing much happening in the stock. But of course, the company still has a positive outlook to end the year.